Inflation's back on the rise, hopefully not for long, but if it is, what are some good investments that you should be using to help manage and create a real return, outpace inflation, even if it is on the rise? I've got 3 ideas for you, that and more, coming up. Inflation is a stubborn enemy. It really is. Now, during my career, my professional career, we've had times when, inflation is so low and the Fed feels like we need to create some inflation so that we can have bigger GDP growth and so on and, play with fire. And gosh, then we went through COVID and, right or wrong, listen, we printed $5 trillion, threw it in the economy in a couple of weeks and said, let's see what happens here. And then we're shocked. It said that, no, inflation's transitory. This is not really, no, guys, yes, a lot of money, a lot more money into the system is going to push prices higher. And so there we have it. And it's been stubborn really ever since. And yes, it's come way back down from those post-COVID peaks. But here it's on the rise again, and hopefully not for long. But if we are seeing inflation on the rise, how should you position your dollars? Are there certain investments that tend to do well and outpace inflation? In economic terms or financial geek speak, they call that a real return, right? If inflation's 3% and your money market's earning 3%, you got a 0% real return, right? Yeah, you got 3%, but your dollars were worth 3% less, so there you go. It's 0% real return versus, say, the stock market up 10%, inflation's 3%, you got a 7% real return, right? So what are some investments where you can get some real return even if inflation is on the rise? First, a word on the traditionally thought inflation hedges. Now, these could be great solutions or options for you, but they're not going to be part of my 3, and I want to point it out, okay? Gold and then digital gold, Bitcoin, okay? Both of these over the long term, and you could argue, has Bitcoin been around for the long term or not? Yeah, hard to say. But both of these, if you look over the long term, will do just fine against inflation, and really are designed, and sort of the appeal is that, listen, in a fiat currency where new dollars could just be created out of thin air or whatever, Jerome Powell said in that famous interview, effectively we just print it. You can't just print gold, right? And yeah, they are still mining Bitcoin, but there's going to be a finite resource to it. So these are both seen as finite resources and inflation hedges against a dollar debasement and protection. And yet the reason why I would say, okay, these are great ideas, and maybe for a portion of your portfolio, depending on who you are, as a direct inflation hedge, not that there's any like perfect solution here, but these don't always go up during high inflationary times. If they're truly inflationary hedges, which is what they're typically considered, then you'd expect as inflation goes up, you're going to see gold go up, and that's not always the case. I can point out countless scenarios and times when that was not the case. Most recently, as we saw, yes, inflation was on the rise in 2020, and yet it's a lagging indicator, so it really didn't measure that way until 21, 22, and a little bit in 23. How did gold do during that time? Not great. Not great. After that, and you can consider a sort of speculative boom because of the dollar debasement, it's done fantastic. Now, was that due to inflation, or was that due to other factors? We don't know. But the most recent high inflationary time, during that time period, gold did not do well, right? And while Bitcoin during that time did, it's extremely, extremely volatile. And even though we've seen, some inflation pick up here, gold seems to have done fine. Bitcoin not as well. So these are good, I'm going to say good inflationary hedges over the long term, dollar debasement hedges over the long term, and yet speculative in the short term. And I would say speculative because yes, all investments carry risk, but these carry more volatility, more volatile risk. So maybe a good solution for you. I wouldn't say for a large portion of your portfolio. What are 3 other ideas in addition to these? You cannot ignore the stock market. You can't. If you look out over the long term again, and maybe not on a week-to-week basis or month-to-month basis, but what investment has been the most consistent at providing strong real returns, so outpacing inflation, it's been stocks. It's been stocks. Now, this does go against your conventional feelings or your overall conventional thinking. It's common to feel like, we got a high inflation reading. Things feel more uncertain. The stock market doesn't like uncertainty, or I feel uncertain about the stock market, therefore I should go risk off. And on a moment by moment basis, that actually might work or it might not work. However, over the long term, history is extremely clear. Not just during high inflationary times does the stock market do well, right? It tends to do okay when inflation is rising. We saw that, in 2022, everything was going the wrong direction. That wasn't necessarily due to inflation. That was more economic factors. But certainly we've seen inflation, on the rise right now, and stocks tend to do all right. Yep, we had a couple recessions in the early 80s. Stocks were able to navigate through that. And so over the long term, stocks provide a great real return. I would make sure that you're diversified. Right now, the U.S. stock market, at the time I'm recording this, a fantastic earnings growth and optimism, and the stock market has outperformed many people's expectations. Emerging markets have done even better. International stocks have done even better. So making sure that you're diversified absolutely will help, but making sure that a foundational part of your portfolio and your plan to beat inflation, even as inflation is rising, it's got to include some stocks. In addition to that, if you want to add some high dividend equity income, might be a good idea. Currently, the dividend yield on the S&P 500 truly is laughable. That was not scripted. It's embarrassing. And I get it, because all return comes from the same source. So whether a company is paying it out in dividends, or they're using their profits to do share buybacks, or they're reinvesting their profits into R&D and research and so on to help the stock appreciate even more. I mean, it's what you do with the profits, really. But even though the overall dividend yield on the S&P is very, very low, because more and more companies are choosing to do share buybacks or to invest in R&D, you can, and thanks to some more creative tools, you can still structure a high dividend equity income portfolio that can outpace inflation. Maybe on an absolute return somewhere in that 8% or so. And if inflation is, going from 2 to 3, maybe 3.5, you got some good real return there. Now, you're going to want to be diversified, and you're going to want to work with your certified financial planner, because there's new tools available for this. If you just look at some of the, big players, so Fidelity's got a high dividend and Schwab's got a high dividend. I personally do like both, but I wouldn't say that those are enough. You might want to consider using some strategies, and be very careful here, work with your CFP, but using some strategies that actually have some option overlay to boost some dividend or boost some of their yield. These are more sophisticated strategies, may make sense as a part of a diversified equity income model. If you can find an equity income model that's paying a dividend 4, 5, even 6, 7%, something like that, with a potential for some capital appreciation as well. So your overall absolute return is in the 8 to 10% range. Again, not on a day-to-day basis, month-to-month basis, quarter-to-quarter, but over the long term, that absolutely can be a great, great contributor to beating inflation, even during rising inflation environments. And then lastly, do need to give a nod both to tips, but then also to finding a fixed income instrument. If you listen to those first really 3 ideas and say, too much volatility, it's for my comfort level, they mathematically and historically, they might help really with inflation, but just too much volatility for me or my stage of life. Okay, I get that. Well, then how else can you manage inflation? If you just invest in bonds or bond mutual funds or exchange traded funds, I think at best, you're going to keep up with inflation, and likely not, right? It might feel really safe, but as far as purchasing power, it's not going to do a great job keeping up with inflation. And yet, you could be super selective, okay? If you're looking for a bond type instrument or something that is less volatile, you could find a treasury inflation protected security, so a TIP investment that is designed to have the income increase a little bit during higher inflationary times. That can make a ton of sense. Those exchange traded funds or mutual funds may make sense, or maybe just an individual bond. Or on the other side, just being selective about an individual bond that you think is paying a competitive interest rate, 4.5%, 5%, something like that. Harder to find 5 right now, but you can still find a 4.25%, 4.5% yield to maturity or income right now on a fixed investment, not doing a mutual fund or exchange traded fund, but being selective about, well, which bond would I hold? What's the right maturity date? What's the right risk level for you? And that sort of thing. But you can still find a decent yield that would give you a little bit of real return, even in a rising inflationary environment. Because the question is, well, is inflation going to be so stubborn right now that the Fed's going to have to start raising rates? A lot of people think that that's possible. I wouldn't say it's probable, but things could change in an hour. Like we don't know. And that would be the risk of owning an individual bond, but maybe something to consider. Work with your certified financial planner. Hopefully, this stubborn inflation isn't around for long. And hopefully we don't see it continuing to rise. And yet, one of your responsibilities as you're managing wealth is trying to generate a real return, right? And outpace inflation over the long term. Diversification is going to help. I'm not just talking about diversifying your stocks. I'm talking about diversifying your approach. Work with your certified financial planner to build out the right retirement investment strategy approach for your retirement dollars so that you can keep up with and outpace inflation even if it's on the rise. Work with your CFP on that. If you don't have a CFP on your team, contact one on my team. Find us online, Korhorn.com. That's Korhorn with a K, wisemoneyshow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go on and take your next wise step in your financial life.